Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. Euro-dollar. An indecisive spinning top yesterday that could also be seen as a possible hammer pattern. This actually best describes what actually happened yesterday. The market chose to break down below the newly drawn, small, potential bull channel, currently 105.57 to 107.16, which is not highlighted as yet because I'm still not certain of its validity. Drop down to the former upper bear channel line, currently at 105.13 of the previously highlighted mid-July to date bear channel, highlighted in bright red on my daily chart. But then back upwards, such that prices closed back within the newer bull channel, just under the April 2017 low at 105.68. Overhead, we still have limited congestion at 106.13 and at the 2020 low at 106.36. But the next significant overhead resistance is still the declining short-medium moving average, currently 106.74. Now, I'd previously laid out potential topside targets for the break above the earlier bear channel pattern in red of a primary target X in the 107.10 area with a secondary target X1 in the 108.05 area. I am now having some doubts about this. For the moment, I will still keep them on my daily chart, bearing in mind target X was actually reached. Meanwhile, looking further below, we have the support of the combination of the February and March 2017 lows at 104.92 before a pretty clear area until the congestion between 103.40 to 103.69. So far today, not much. Indecisive around the newer, lower bull channel line and just under the April 2017 low. Cable, aka sterling against the US dollar. A reactionary bullish harami yesterday still had a dip down to the lower end of the recent range, at the May 2020 low at 120.73. This market had moved down towards the lower end of its recent range, but it still continues to exhibit a wide-ranging indecision between below the May 2020 low at 120.73 and above the 50% Fibonacci line of the June 2021 to September 2022 move at 123.16. The main recent feature here had been the breakdown below and out of the March to August rising wedge pattern, highlighted on my daily chart in bright red. The targets for such a pattern were a primary target in the 124.10 zone and a much harder to reach secondary target X1 in the 116.05 zone. Now, the primary target was achieved in mid-September, but the secondary target now looks very much out of reach, as the market has decided to hesitate between the May 2020 low at 120.73 and the 50% Fibonacci line on the June 2021 to September 22 move at 123.16. I was minded to retire target X1 after my last commentary, but I have instead relented for now. I have over the last few sessions pondered on whether the action since mid-August may not have elements of a bearish halfway hesitation or double bottom pattern about it all. I'm still pondering on this matter. So far today, a small attempt higher towards congestion at 121.5, but prices have quickly backed off lower and back within yesterday's range, looking indecisive at the moment. Euro sterling. A really interesting immediate countering bearish double, bearish dark cloud cover pattern and key reversal down, if only just on the latter one. Prices had turned and dropped down through the April 2021 high at 87.19. That had provided an overhead cap to the market for late last week and most of this week, and fell all the way down to the very slowly declining long moving average, currently 86.92, before halting and retracing a little. Once again, the market utilized the slowly declining long moving average below, highlighted in gold on my daily chart, as a base for the recent action. The earlier idea I raised that the move since early September may be a bullish halfway hesitation on top of the recent roof pattern still sits at the fore, as we have a potential target X2 for this pattern in the 87.95 area. The overall bigger picture pattern still remains the June to September roof pattern, with a primary target for this pattern in the 87.42 area, a primary target that in effect had been achieved last Friday, and a harder to reach secondary target X1 up in the 88.18 area. So far today, slightly lower open and dip, but the market started to move higher towards the April 2021 high at 87.19 and looks like an indecisive doji cross right now, of all things. US dollar against the Indian rupee. A bullish closing white Mariposa and a second bullish white soldier yesterday, as the market continues to show that perhaps, just perhaps, the recent break lower from this previously highlighted in dark blue on my daily chart and ramshackle late July to mid-October ascending triangle may still be a false break lower. We ended up yesterday right on the extension of the downtrend, currently at 83.24 of the previously highlighted in dark blue on my daily chart, to say somewhat ramshackle ascending triangle. Now, in the immediate vicinity overhead, we have the significant October 2022 high at 83.27 and then the August high at 83.44. Whilst below we have the flatlining short medium moving average I should say, at 83.05. I'd previously laid out potential targets below for the ascending triangle for primary target X in the 82.45 zone and a secondary harder to reach target X1 in the 81.45 zone. I've decided today to place a question mark over these, purely because of the increased possibility of a false break. Now so far today, well, continuation higher, up to test the October 2022 high, but so far unsuccessfully, as prices have dipped back below the extension and down to the flatlining short moving average, currently 83.18. US dollar against the Brazilian real. A bearish engulfing pattern yesterday, and also what appears to have been an attempt at a bearish closing black Mariposa of sorts. Prices punched up over the highlighted in gold long moving average, currently at 499.47. But the move was not sustained and we ended up back below it, sitting on top of the combination support of the flatlining short medium moving average, currently 498.39, the upper trend line extension highlighted in purple on my daily chart of the August to September rectangle pattern, currently 497.89, and the 50% Fibonacci line of the October 2019 to May 2020 move at 496.61. All these was why we had indecision as bearish pressure met bullish stone wall. Now looking overhead, we had the previous capping action of the combination of the Fibonacci lines at 507.39 and 505.73, especially at 505.73, as well as the short moving average, which is currently at 505.73 as well. Yeah. Overall, in the bigger picture, the market continues to be moving within the breached but ultimately still valid November 2022 to date bear channel, currently 470.57 to 516.35, and it's highlighted in bright red on my daily chart. The most recent incident involving this bear channel had been the upper bear channel line capping the market in early October. US dollar against the Mexican peso. A reactionary key reversal down and bearish engulfing pattern yesterday, if only just on the latter. Interestingly, it was the first close below the recent bull channel, currently at 18.2281 to 19.0279, which is highlighted in bright green on my daily chart, and now threatens the whole idea of this pattern. I have, however, noticed a contingency in case this pattern does lose its validity. Actually, there are two contingencies. Firstly, we have a possible late September to date double top, and or then a possible late September to date ascending triangle, which is currently 18.2042 to 18.4642, and is highlighted in pink on my daily chart. The close yesterday was right on the upper trend of this pattern. In addition to all this, we have the previously highlighted pattern of a possible July to September lopsided reverse head and shoulders pattern. This one is highlighted in bright red on my daily chart, and the neckline is currently at 18.1047. Added to all this is the interference play being pushed by the neckline of the January to May 2021 head and shoulders top, currently 18.2251, one highlighted in purple on my daily chart. As you can see with all these trend lines, my daily chart is beginning to resemble a kaleidoscope. Anyway, I had earlier laid out some possible targets topside for the break higher from the March to July descending wedge pattern, the one highlighted in bright green on my daily chart, and also the break higher out of the long-term September 2022 to October 2023 bear channel, the pattern highlighted in dark blue on my daily chart. The primary targets for both have been achieved. However, the hardest to reach secondary target X2 for the descending wedge pattern, and also coincidentally the hardest to reach secondary target for the bear channel, are both at the same area, around 1894, and are still open higher up. Though I'm starting to have doubts about these now. I also have not as yet placed any primary or secondary topside targets for the reverse head and shoulders bottom as yet, mainly because we are still too close to the neckline for my liking, and also because I like to see target X2 reached or rejected. Now so far today, a further move lower, away from the uptrends of both the bull channel and the ascending triangle, and down to test the neckline below of the reverse head and shoulders bottom. Beneath this we have little until the flatlining long moving average, currently 1771.08. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.